All right, so we got a great question from a listener
Okay.
about the housing market.
Yeah.
Is now a good time to buy a house?
Right.
Everybody's talking about mortgage rates being lower,
Mm-hmm.
and we're going to take a deep dive today and see if those lower rates
Okay.
actually mean it's a good time to buy a house.
Interesting.
We've got some sources here, and it seems like they're saying different things.
Really?
Yeah, like some experts are saying, yeah, jump in, now's the time.
Okay.
But others are saying, hold back, wait a little bit.
Huh.
So it's kind of like a tug of war with the housing market.
A little bit. Yeah.
So we're going to try to unpack all that and see
Yeah.
what's really going on.
All right.
One of the first things I noticed in looking at these articles is that they're talking about the Fed cutting rates,
Yeah.
which you would think would mean mortgage rates would go down.
Right.
But it seems like that's not really happening.
Well, it's interesting you bring that up because what we're seeing is these two things, the Fed rates and the mortgage rates, they don't really move together.
Oh, really?
Yeah.
That's
So
kinda
like
like
Goldman Sachs is actually predicting that rates are going to stay above 6%
Wow.
till the end of 2025.
That's a long time.
Yeah.
Even though the Fed is cutting rates.
Exactly.
That's crazy.
Yeah. And then we have this other article, mortgage rates back to 7%.
Oh, no.
The 30-year fixed rate is back up to 7%.
7%.
Yeah.
That's not what people were expecting.
No, not at all.
I mean, Molly Fool was saying that 2/3 of buyers are waiting for rates to drop
Oh, well.
before they even enter the market.
That's a lot of people.
And then 40% haven't even talked to a lender yet.
Wow, they're really waiting.
Yeah, they're just watching those rates.
I see.
So what's the deal? Why are mortgage rates not going down?
Well, I think part of it is, like I was saying before, mortgage rates don't just follow the Fed rates.
Yeah.
They're also influenced by the bond market. And right now, investors are kind of hesitant, which keeps those bond yields up. And that keeps mortgage rates higher.
So it's like a chain reaction.
Yeah, exactly.
And it's not the reaction buyers are hoping for.
Right.
I mean, even CBS News was surprised that rates actually went up after the Fed cut rates in September.
Really?
Yeah, their article was even titled, "Will Mortgage Interest Rates Fall This November?"
Interesting.
Like they don't even know.
Wow.
So if rates aren't really going down, what does that mean for all those buyers who are waiting?
Well, think about it this way. If everybody decides to jump into the pool at the same time, what happens?
It gets crowded.
Yeah, it gets crowded. And, maybe somebody gets splashed in the face.
Yeah.
So with all these buyers waiting for rates to drop, as soon as they do, you could see a lot of people entering the market at the same time, which could actually push prices up.
Oh, so instead of prices going down,
Right.
because of more demand,
Exactly.
prices could go up.
Yeah.
So it's kind of like a housing market logjam.
You could say that, yeah.
Everyone's waiting, and then when things start moving, it's going to be a mad dash.
Exactly.
Especially since we're still facing a housing shortage.
Right.
Freddie Mac estimates we're short 1.5 million housing units.
Yeah, so you've got all this pent-up demand, not enough supply.
Right.
That's a recipe for some real competition.
Okay, so now I'm starting to see the bigger picture.
Yeah.
It's not just about getting a low rate.
Right.
It's about this whole market that's about to get very crowded.
Exactly.
But what about all the people who already own homes?
Oh, that's a good question.
Are they going to be selling?
Well, that's the thing. A lot of people locked in those really low rates a few years ago.
Right.
Motley Fool says 75% of homeowners have rates below 5%.
Wow.
So why would they sell and buy a new house at a higher rate?
Right. It doesn't make sense.
A lot of them are choosing to stay put. Maybe renovate or use a HELOC.
That's what my neighbor did.
Oh, yeah.
Yeah, they just finished a basement remodel. They said it was way cheaper than buying a bigger house.
Yeah, that makes sense.
So we've got buyers waiting, homeowners staying put.
Right.
It's like a game of musical chairs, but with houses.
That's a great analogy.
And there aren't enough chairs to go around.
And to make things even more complicated,
Oh no, what now?
we got to look at the commercial real estate market, too.
Oh yeah, that's right.
It's not just about individual buyers and sellers anymore.
So what's happening over there?
Or an article in Financial Reporter said, commercial lending is taking up a bigger share of the property market.
Really?
Yeah. Why is that?
Well, unlike individual buyers, who are more sensitive to those rate changes, commercial borrowers have different priorities.
Okay.
they often have these long-term investment strategies.
I see.
So they're not as worried about a small increase in rates.
Okay.
They're playing a whole different game.
It's like a whole other layer of the housing market puzzle
Exactly.
that most people don't even realize is there.
It really makes you think about all the factors beyond just those individual decisions.
Absolutely. Yeah, it's like they're building a skyscraper while everyone else is looking for a parking spot.
Yeah.
They're operating on a different scale.
So it's like this whole other layer that most people don't even know about. But, okay, let's bring it back to our listener. Who's trying to figure out if now is the time to buy?
Okay.
It sounds like lower rates.
Yeah.
Aren't the answer we thought they would be?
Right. It's not that simple. You can't just say rates are down, let's go.
Right.
You have to really think about your own situation, your financial goals, what you can actually afford.
Okay, but give us some hope.
Okay.
What can potential buyers do right now to prepare for when the logjam breaks?
Well, first of all, don't just settle for the first rate you see.
Okay.
Shop around.
Shop around.
Okay. It's amazing how much rates can vary.
Really?
Yeah. The Ascent did a whole article about this, and they found that even 0.25% difference can save you thousands of dollars.
Over the life of the loan?
Yeah.
I think I read that Chris Niger saved like $9,000.
Yeah. Just by comparing lenders.
Wow, that's a lot of money.
Right.
Okay, so shop around.
Shop around. Anything else?
Yeah, and make sure you compare different loan terms.
Okay.
15-year versus 30-year.
Okay.
And understand what APR means.
APR.
That stands for annual percentage rate.
Right.
And it gives you a better idea of the total cost of the loan.
Okay.
Including fees and all that.
So it's not just the interest rate.
Right, it's everything.
Okay.
Forbes Advisor has some good info on that.
Okay, cool. What about refinancing? Is that a good idea right now?
Refinancing can be tough right now.
Yeah.
Because remember all those homeowners? With their low rates,
Right.
refinance rates are usually higher than purchase rates.
Oh, I see.
So it might not make sense.
So focus on getting a good rate on a new purchase.
Yeah.
Not refinancing an existing loan.
But even if you do find a great rate, aren't prices going to go up
Yeah, that's the tough part.
with all the demand?
It's like a catch-22.
It is.
But real estate is cyclical.
Well,
What goes up must come down
right.
eventually.
Eventually.
And Goldman Sachs did say rates should start to ease by the end of 2025.
Okay, so there's hope.
There's hope.
Maybe.
Maybe.
So it's not really is now the time to buy,
Right.
but more like, am I going to be ready
Yeah,
when the time is right?
exactly.
That's a good way to put it.
And another thing to think about is that housing supply issue.
Right.
Even if rates drop
Right.
and demand goes up, if there aren't enough houses,
Yeah.
prices could still stay high.
Right. So what's being done about that?
That's a big question.
Yeah.
There's no easy answer. There are some efforts to build more houses,
Okay.
but it's slow.
Yeah.
Lots of factors involved.
Right.
Material costs,
Yeah.
labor shortages, zoning regulations.
Wow. It's a whole other deep dive.
It is.
Okay, so we got buyers waiting, homeowners staying put, not enough new construction.
It's like the market's stuck.
Yeah, it is.
But things are changing too, the
Right.
way people are thinking about homeownership.
How so?
Well, for one thing, there are more alternative options,
Like what?
like co-living spaces,
Okay.
build-to-rent communities.
Interesting.
They offer more flexibility,
Okay.
maybe more affordability.
So it's not just the single-family home anymore.
Right.
There are other options.
Exactly.
Oh.
And technology's changing things too.
How so?
Online platforms,
Yeah.
virtual tours.
Okay.
It's easier to search for homes,
Mhm.
even if you're not in the same place.
So the market's going digital.
Yeah, you could say that.
That's kind of cool.
Yeah.
So even though things are uncertain right now,
Mm-hmm.
there's a lot of innovation happening. It feels like the future of homeownership is going to look really different.
Yeah, I think so.
That's exciting.
Yeah, it is. That's why it's important for buyers to stay informed,
Okay.
stay adaptable, really think about what they want, their goals and lifestyle.
This has been so eye-opening.
Yeah, it's a lot to take in.
We've gone from just looking at rates
Mm-hmm.
to this whole web of factors.
It's complex.
It is. It's like peeling back the layers of an onion.
Yeah, and there are more layers to go.
That's right. But let's try to sum up some key takeaways for our listener.
Okay. The bottom line is, don't just focus on rates.
Okay.
They're important, but they're just one piece.
Right.
Focus on your financial foundation.
Okay.
Save for a down payment.
Mm-hmm.
Improve your credit score. Figure out what you can afford.
Right, the basics.
Yeah.
So it's like getting ready for the race before you even get to the starting line.
Exactly.
Okay, so get your finances in order.
Yeah.
What about credit scores?
Oh, yeah, that's huge.
Those are important, right?
Super important.
And lenders look at those.
Yeah. Your credit score is like your financial report card.
Oh, okay.
It shows how responsible you are with money.
So the higher, the better.
Exactly, the higher your score, the better the rates you'll get.
Okay, so check your credit report.
Yep. Make sure it's all accurate. And if there are any problems, start fixing them now.
So like polish up that credit score.
Exactly. Make it shine.
All right, so we talked about challenges.
Yeah.
But let's end on a positive note.
Okay.
Any opportunities coming up?
Well, like we said, rates could start going down in 2025.
Right.
If that happens, and we get more houses on the market,
okay,
that could be a good time for buyers.
Who are ready.
Yeah, exactly. And with all the new stuff happening, we might see more affordable options too.
So stay informed.
Yep, stay curious.
Keep your options open.
Exactly.
I like that. The housing market is like a landscape.
Okay.
It's always changing.
Yeah.
There might be bumps.
Right.
But there are also those hidden gems.
Yeah, you just got to find them.
This has been so helpful.
Glad to hear it.
We've learned so much.
It's a lot to take in.
It is. But now I feel like I understand the bigger picture.
That's great.
So for our listener,
yeah,
what are the key takeaways?
Okay, so first, don't be fooled by those headlines about lower rates.
Okay.
There's more to it than that.
Right.
Do your research.
Okay.
Second, get your finances in order, save for a down payment, improve your credit, know what you can afford.
The basics.
Yep. And third, stay informed.
Okay.
Stay curious. The market is always changing, so be ready to adapt.
Well said. And don't forget, folks, we have links to all the articles in the show notes.
Yep, check them out.
So you dive even deeper.
Exactly.
And if you have any questions about the housing market or anything else, send them our way.
We love to hear from you.
Okay, so as we wrap up, I'll leave you with this.
Okay.
Don't let the market get you down.
Right.
Whether you're buying now or later.
It's about being prepared.
Exactly.
And excited for what's next.
Well said. Until next time.
Yeah.
Keep diving deep.
Yeah.